Did you know that income funds manage over 3 trillion in assets worldwide? Yes, trillion with a T. It's a colossal figure, isn't it? These funds are a significant player in the global financial market, providing a reliable source of income for millions of investors. From retirees to corporations, they all turn to income funds for their financial needs. However, like all investments, income funds do come with certain risks. For instance, there is the market risk, where the value of investments can decrease due to changes in market conditions. Then there's the credit risk, where the issuer of the bond might default on their payments. With such an enormous figure and associated risks, one might wonder, what exactly are income funds? Income funds, in the simplest terms, are mutual funds that aim to provide a steady income to the investors. But what does that mean exactly? It's all about the structure and operation of these funds. They are primarily designed to invest in securities that offer regular returns. These can include dividend-paying stocks, government and corporate bonds, and other income-generating assets. The magic happens when these diverse investments come together in a portfolio. The fund manager carefully selects each security, balancing the portfolio to achieve the fund's investment objective. This could be anything from capital preservation to high income. Here's where the difference lies. Unlike growth funds, which focus on capital appreciation, income funds prioritize regular income generation over growth. They are the tortoise in the race, slow and steady, offering consistent returns rather than spectacular growth. So, how do income funds differ from other debt fund categories? Let's find out. While both income funds and other debt funds aim to generate returns, their approach and risk levels differ considerably. Income funds, as the name suggests, are primarily designed to provide a steady stream of income. They achieve this by investing in a mix of government securities, corporate bonds, and other fixed income instruments. The primary focus here is regular income generation. On the other hand, other debt funds might focus more on capital appreciation. These funds invest in a diversified range of securities, including equities, which can potentially offer higher returns. But remember, with higher returns come higher risks. One key difference between the two is the risk and return dynamics. Income funds typically carry lower risk as they mostly invest in fixed income securities, offering a more predictable return. Other debt funds, due to their diversified nature, carry a higher risk, but also the potential for higher returns. Now that we understand the difference, let's delve deeper into the income generation and distribution aspect of income funds. Income funds generate income through dividends and interest from their investments. But how is this income distributed to the investors? Well, it's a process that typically unfolds on a monthly, quarterly, or yearly basis. Let's break it down. The income funds invest in a variety of assets, such as bonds, stocks, and other securities. These investments generate returns in the form of dividends or interest. This income is then gathered and distributed to the investors based on their proportion of ownership in the fund. For example, if you own 10% of the fund, you would receive 10% of the income generated. This distribution can be a reliable source of income for many investors, making income funds a popular choice for those looking for steady cash flow. So there you have it, the basics of income funds explained. But remember, while income funds can offer regular income, they are not without their risks. To sum up, income funds are all about generating a steady income for investors. We've explored their structure, contrasted them with other debt fund categories, and delved into their mechanics of income generation and distribution. Remember, understanding the risks involved is critical before venturing into any investment. We've also touched on the taxation and regulatory aspects that govern income funds and shared some investment strategies. Stay tuned for more insightful videos on finance and investing. Don't forget to subscribe to our channel for regular updates. Until next time, happy investing!